Today, the force that controls the financial markets isn't human intelligence, governments, or even billionaires. The real power is something you can't see, can't hear, and almost no one talks about: an algorithm. And this algorithm is so fast, so unbelievably powerful, that a single mistake can erase $1 trillion from the global economy in minutes. So answer this honestly. If this is the thing controlling the world's money, are we really still in control? Or did we lose that a long time ago? This is the untold story of the secret algorithm that moves trillions. Before algorithms took over Wall Street, the markets were entirely human. Back in the 1970s and 80s, the stock exchange looked like a battlefield. Men shouting, waving papers, phones ringing non-stop, pure chaos. Every decision was driven by instinct, emotion, and risk. But Wall Street had a huge problem. Humans were slow. Humans were emotional. And more importantly, humans made mistakes. By the 1990s, technology exploded. Computers became cheaper. The internet grew faster each day. And that's when mathematicians, physicists, and statisticians, people with absolutely no connection to traditional finance, started joining hedge funds. These weren't traders. They didn't follow CEOs or watch news broadcasts. They focused on one thing: patterns, statistical correlations, microscopic repetitions in price movements, signals the human eye could never detect. And they discovered something shocking. If you find the pattern, you make money. Consistently. At first, no one cared. Algorithms were the background actors of the market. But as years passed, one truth became clear. Markets were not random. They were extremely predictable. For a fast enough machine by the early 2000s, Wall Street went quiet. The shouting traders disappeared. Their place was taken by cold metal servers humming in dark rooms. Today's financial system is controlled by 4 core categories of algorithms. A. Market-making algorithms. These machines supply liquidity. They publish buy-sell prices constantly, not per minute, but millions of times per second. Their goal: capture microscopic price differences. 1 cent, half a cent. But repeated billions of times per day, the result becomes enormous. They're the reason you can buy or sell a stock instantly. B. High-frequency trading, HFT. Algorithms. These algorithms are the definition of speed. They don't care about a company's future. They don't know the CEO. They don't analyze earnings. They want only one thing: to be faster than everyone else. These machines see a price in 0.000001 seconds. Decide in 0.00000002 seconds. Execute in 0.000003 seconds. Humans simply do not exist at this speed. The competition is machine versus machine. Some firms even spend millions to physically reroute fiber cables, just to reduce latency by a few microseconds. C. Arbitrage bots. These are the smartest opportunity hunters on Earth. Examples: Bitcoin is $30,000 on one exchange, $30,200 on another. Gold is overpriced in London, underpriced in Chicago. A currency pair is misaligned for 0.02 seconds. To humans, meaningless. To algorithms, free money. Arbitrage bots buy low and sell high in the same second. D. Sentiment analysis AI. The newest and most dangerous algorithm class. These systems don't look at prices. They look at people. Twitter, Reddit, news headlines, YouTube comments, Google searches, conversations, even politicians. Like a predator lurking for its next move, they gather information non-stop. They analyze everything to answer one question: how does the world feel right now? Is it scared, excited, panicking? Then they trade based on those emotions. This means markets react not to facts, but to human psychology as interpreted by AI. May 6, 2010, 2:32 p.m. A normal day at the New York Stock Exchange. Then suddenly, the market began to collapse. Apple fell 25%. Procter & Gamble dropped 35%. Accenture went from $40 to 1 penny. In just 36 minutes, the markets lost $1 trillion. This event became known as the flash crash. So who caused it? Not humans, not panicked traders, algorithms. One automated sell order triggered another. That one triggered more. One algorithm misread the move as a crisis, sold harder. Others detected panic, sold even harder. The algorithms misunderstood each other. It was a digital panic, a chain reaction, a domino collapse. $1 trillion, gone in half an hour, and no one had time to stop it. After the investigation, the truth was clear. No one was in control. The algorithms were reacting to one another, nothing more. After 2020, AI entered a completely new era. Machines can now write code, generate their own strategies, simulate millions of scenarios, optimize themselves, analyze mistakes, and rewrite their own logic. Some hedge funds have transitioned to fully autonomous AI-managed funds. The machine creates the strategy. The machine places the trades. The machine evaluates performance. The machine improves the strategy. Humans simply watch. So here's the real question. If an AI creates the strategy, executes it, and optimizes it, who is the actual investor? When multiple advanced AIs operate in the same market, the inevitable happens: a silent war. And unlike traditional wars, these battles never truly end. Algorithms analyze each other, predict each other's next move, deploy counter-strategies. Some even send false signals to mislead competitors. This is no longer finance. This is strategy, psychology, game theory, and digital warfare. What does the winner gain? $1 trillion advantage. If most trades are made by algorithms, prices are set by algorithms, market sentiment is measured by algorithms, and even crises are triggered by algorithms, then we must ask, who actually runs the economy? Humans, or a soulless algorithm that not even its creators fully understand? Maybe the world is no longer controlled by people, but by software. And we're only recognizing it through the consequences. Money no longer follows people. People now follow the algorithm. This is Nomisma, where finance, history, and knowledge meet. Don't forget to like and comment. See you in the next financial mystery.